Point, we are going to record the Zoom, so now it's official. I'm talking and we are recording, just so everybody knows. So welcome to the first USC Office of Sustainability Hub Talk. Exclamation point, we're trying to give it a name and brand it because we want to do a lot more of these. This is our first out. So thank you all for showing up and supporting us and attending. And we're going to see how we make the hub not just become a lounge, mostly for students, Monday to Friday, 9 to 5, but also a real resource center for faculty, students, and staff at USC. So this is our first hub programming that's really geared more towards employees. Usually a lot of our stuff is focused for students. We're going to see what is the appetite for learning about sustainability at USC for employees. So thanks for being a part of that. Just a few little ground rules. As I mentioned, we're going to have a lot of people joining on Zoom, and so this is all going to be recorded. Slides that are given to us by our credit union and DWP colleagues are going to be posted to our website along with the recording in a couple of days, as soon as we get all that cleaned up and posted. And one question that I promised I would ask, the DWP folks suggested I ask, is for folks in the room and I guess on Zoom, it would probably help a little bit to have a sense of who's here and what's interesting to you, because there's a ton of information that credit union and DWP can share about resources around sustainability for your homes, your cars, that kind of thing. But it's helpful to know if folks here are mostly interested in sort of like single family homes, apartments, multi-unit, small businesses. So I guess just by a show of hands, are people mostly interested in learning about things that are focused around single family homes? Hands up if that would be sort of you.
Type in the chat, for those online, type on the chat.
Me, you.
Oh no, for those online, please feel free to use the chat to write down what you'd like to learn about.
Thank you. Apartment dwellers, multi-unit buildings. Got a couple there, 2, 3, 4. So it sounds like leaning, I'm looking at you, Brian, because you were the one who so smartly suggested that we do this. So it sounds like mostly leaning towards single family homes, a couple apartments, small business, anybody. That's not necessarily the goal of today's chat. But we could do that another time if we feel like we have a lot of people with a side hustle with a small business in addition to working at USC. No, okay.
Single family home, someone online, Rhonda.
Single family home, excellent. All right, so with that, I'm going to turn it over to Mick Dalrymple, the Chief Sustainability Officer at USC. He's going to take us through a couple slides to kind of set us up for this chat today, and then we'll hand it over to DWP. Thank you all very much.
All right, thank you. All right, so first I'd just like to thank everybody for attending, especially our LADWP and USC Credit Union folks. It's good to have you in the room. And I'm super happy about this because this is the topic that brought me back into higher education back in 2010 from the private sector. I was asked to manage a large research project. DOE funded project is $27 million to retrofit as much of downtown Phoenix as possible for energy efficiency. So it was commercial buildings, apartments, public housing, single family homes, small businesses, large businesses. And it was just a tremendously impactful experience to be able to help people do this and become more comfortable and have better indoor air quality in their homes and reduce their energy bills and let their homes float through coasting, we called it, through summer a little bit better if there was ever a power outage. So, you know, more resilience to climate change potential issues. So it's fantastic to now learn about how that is all done here. So very excited about both the incentive programs and just the overall education programs that LADWP provides, and then also the financing tools that the credit union does to support that work. And so am I able to, can somebody advance this for me?
Abby said.
Okay, great. All right, so Brian Ho is going to speak, Senior Utilities Services Specialist from LADWP. And then Ronik here is going to speak, Chief Engineer or Electrical Engineer for Demand Response Programs. And then also Valerie is going to, where's Valerie from USC Credit Union. So we'll have 3 speakers, but we also have other people here that'll be able to answer questions towards the end. Next. Okay, so this actually supports the USC Sustainability Moonshot you know, climate change. Obviously, this has impacts on climate change, but it also is about some of our goals related to building a sustainable community and sustainable behaviors, both on campus and off campus. And community members are not here today, but USC internal faculty and staff. This is for you. It's part of building the knowledge and awareness, as well as the culture and the behaviors for sustainability. So this supports those goals as well. Next. And then we do have 27 goals across 5 different domains. And so this does support some of our engagement goals, as well as our equity and inclusion goals, being an inclusive community, getting all of this education and awareness to everybody, regardless of background. And then it's not directly related to our operational climate goals, but it supports those. So next. All right. And so also, USC, we're a large customer of LADWP. LADWP does a lot of stuff with us in partnership. And so probably the biggest deal of the last several years has been this large scale solar project, where we are buying renewable energy from a project that LADWP commissioned out in the Mojave Desert called Springbok 3. And it actually really it's made a huge impact on our overall footprint. And as part of that as well, we pay into a community fund that helps LADWP make solar available to affordable customers that might need more assistance. Could be community solar, other programs that help get solar for everybody. So it's actually called the Clean Energy Adder Program. So those are just some of the partnerships we have. We also, as an entity, we take advantage of of LADWP incentives a lot for lighting retrofits. And so we've that's been actually very helpful in helping us convert many more buildings for energy efficiency for LED lights. So lots of different, so this basically LADWP help people down to the individual household or the individual apartment dweller, all the way up to large institutions like us. So it'll be really great to hear about some of these programs. And I think, is there anything else? I think that's the last slide. Let's go to Brian. Thank you very much.
All right, good afternoon, everyone. My name is Brian Ho. I'm a senior utility services specialist in the Distributed Energy Solutions Group Program Design Liaison. Joining me today from my team specifically is utility services specialist Daniel Kim. In the back, wave Daniel. So both of us will be on hand to answer any questions after this workshop as well. But what I'll be doing today is going over approximately like 10 different rebate programs that we have in our entire portfolio. We have more than 30 programs. Some of them range from residential, commercial, but I'll kind of focus on the ones that may be of particular interest to you. I know you've mentioned like single family home rebates for multifamily. So thank you, Ellen, for kind of gauging the room and seeing what interest there was. So at LADWP, we have over 30 different energy efficiency programs available to our customers. Energy efficiency is a key strategy for us to reduce greenhouse gas emissions, support system reliability and resiliency, as well as enable our customers to save on their electric bill. Building electrification and transportation electrification are also both critical for meeting our sustainability and decarbonization goals. So let's get into the programs. If we go to the next slide. There we go. And then feel free to ask any questions. I know we want to kind of make this more of like a informal chat. So the first one I'll share with you is the Cool LA Marketplace. Cool LA is designed to help LADWP customers better manage the impacts of extreme heat caused by climate change, especially older adults, income qualified families, and those living in underserved communities where hot weather has an especially significant impact. In this program, one of the specific ones to highlight is that customers can receive a rebate of up to $225 on the purchase of select air conditioners. To qualify for this program, customers must be current participants in one of the following financial assistance programs that LADWP offers. Easy Save, the senior citizen disability lifeline rate, physician certified allowance discount, or the life support equipment discount. This cool LA rebate is an additional rider on top of what our efficient product marketplace offers. Just to see, could I get a gauge of hands if anyone's willing to share DWP customer, yes or no? All right, oh, a lot of folks, all right, glad to see. So the second program is the efficient product marketplace. This is a convenient marketplace that allows customers to receive rebates for popular energy efficient products available at various retailers. I have some of them listed there and their subsequent rebate amounts. Anybody in the market for any sort of appliances? Yeah, got one out there. What are you in the market for? Refrigerator, okay, yeah. So in our program, we have a rebate of up to $75 through the efficient product marketplace.
Brian, to get that rebate, do you have to go to specific retailers or could you get it at anyone and then? And did you get the rebate afterwards, or is this a buy down program where you get an instant rebate at the site?
Yeah, that's a really good question. So our efficient product marketplace, we're moving, and we previously had it online. You could go onto ladwp.com/the marketplace. You could search for, let's say, a refrigerator you want to look to buy, see what qualifies, and then get that rebate online. We are in a contract transition stage, as I'm sure USC is very familiar with all the different programs. We use third-party contracts to run these or to implement our programs. And so the efficient product marketplace, we're hoping to have back up online, I believe January of next year, but it's still active, just not in the online form. So what we're asking customers to do is go to the retailer, let's say any big box store, you buy a refrigerator, make sure it's Energy Star certified equipment, and then go to our webpage, access the PDF form, and then submit that application afterwards, after you've already purchased the equipment to receive a rebate. Does that answer?
Yes.
Okay, yeah.
And just a follow-on question for that, because I'm thinking about buying an air conditioner, even though I swore I was never gonna buy a window unit again, but yeah, summers are real.
Yeah.
Is it, like, how quick does it usually take y'all to process and return and cut a check or get, and there's also like a rebate on your bill, or how does it actually pay out?
It's not a rebate on your bill, it's gonna be a check that we could provide. I don't know, like a average time frame I could give you for that, but it's also kind of dependent on, you know, is everything on the application correct? I think that's what delays the process, is if something's incorrect on the application, then our folks will be working closely with you to resolve those issues so that we could get you the rebate.
Got it, thank you.
Yeah, absolutely.
Are there, I know in the top one on your slide, you have a limit of 2 air conditioners. Are there limits on some of the other products? Like, well, I don't know how many people get multiple refrigerators, but
Yeah.
televisions or things like that, is it up to, you know, 25 per purchase or per customer?
That's a good question. I want to say there's not a limit under the efficient product marketplace, but I'll have to double check in the terms and conditions. I have it with me, and so I could give you the answer afterwards. I want to say there's not a limit, but the limit is on the Cool LA marketplace, where you're getting that increased incentive amount of limit to air conditioners per customer. Yeah. All right, let me move on to the next slide. And so this is our consumer rebate program. The consumer rebate program provides rebates to residential customers to promote the installation and use of energy efficient equipment, ranging from variable speed pool pumps to home heating, ventilation, and air conditioning systems such as a central AC. This program is designed to both educate and encourage the use of the most energy efficient products by providing rebates for products that exceed the state or federal efficiency standards. So think of this program as kind of like the larger projects you may undergo, as opposed to those appliances like refrigerators. Anybody own a home and looking to do like a replace the entire central AC unit, have a pool, wanna looking at replacing the pool, so this is the program for you. So variable speed pool pumps, up to $500 per unit. Or if you're looking to electrify, so in this program, we have heat pump water heaters that you can receive a rebate of up to $1,500. A central heat pump HVAC unit is $300 per ton.
So what's the time frame? Like, we put in new air conditioning last year, last, like, about almost a year ago. Is it too late to try to get a rebate?
There, I'll double check in the terms as well. That's a good question about the timing for that. I want to say it's a year, but let me double check in the terms for when you can submit a rebate for, depending on when you purchase the equipment. I'll get that to you after.
Start typing, Mary Kay.
I know.
And, all right, let me go to the next program here, which is city plans. City plans are very popular programs available for both residential and commercial customers to receive up to 7 free shade trees. City plans addresses the low tree canopy cover in the city, which averages 21%, well below the national average of 27%. Trees provide energy savings through shading buildings and decreasing ambient temperatures, while also removing pollutants from the air, absorbing polluted runoff, and providing aesthetic benefits. Anyone interested in receiving a free tree? It's the program for you, cityplants.org. All right, next slide, please. Here's a completely free program. It's the Home Energy Improvement Program, which offers free energy efficient upgrades for residential customers and their families, designed to help reduce their energy bills by making their homes more energy efficient. Through the program, an assessment of a customer's home will be performed by one of our trained technicians to identify the most appropriate and effective improvements available. Upgrades could include caulking, weather stripping, LED lights, low flow shower heads, low flow toilets, as well as attic insulation. We also have what we call the multi-residential HYPE program. We're calling this HYPE for short, for 5+ units where the property manager of the apartment complex can apply for the HYPE program. So completely free. Again, our LADWP staff, actually utility pre-craft trainees who work for our power system and LADWP will come out to do the assessment in your home. So really excellent program. Yeah, next slide. So this one I'll probably just breeze through really quickly, but this is a more comprehensive, again, called the Comprehensive Affordable Multifamily Retrofit. This one we're shortening and calling it just CAMR. It offers low-income multifamily property owners free efficiency assessments to help save energy and reduce costs, as well as aid with work scope development and obtaining bids from contractors. So this is more large-scale whole building multifamily properties. If anyone is a multifamily property owner here, this would be the program for you. Next slide. And then I didn't see earlier hands for any particular business owner, but I'll just share a little bit about these programs in case you guys are interested. This is our food service program. We offer rebates for qualifying electric cooking and refrigeration equipment, help customers decrease energy use by as much as 75%. So we have rebates ranging anywhere from $40 to $5,000 if you're running a restaurant, or not just a restaurant, if you have like a refrigeration type equipment at your business. Next slide. And then also, again, for businesses, so I'll breeze this through this one. This is free energy efficiency upgrades to our commercial direct install. For this program, we're our implementer is going out to businesses, doing the assessment and then providing free energy savings measures. So that includes upgrades to energy efficient lighting systems and LED exit signs. And next slide. All right, got 2 more slides here. And the last thing I want to talk about is transportation electrification. Can I get a survey of the room? Any EV drivers? All right, anyone interested in EVs or looking at Placing gas vehicle EVs, all right, excellent. So our residential EV charging station rebate program offers customers rebates to help offset the cost of purchasing and installing eligible charging stations for electric vehicles. Customers may receive a rebate of up to $1,000 for the purchase and installation of a qualified level 2 charging station, and a $250 rebate for the installation of a dedicated EV meter. In addition, if income eligible customers participating in one of our qualifying financial assistance programs are going to be eligible to receive an additional $500 rebate on top of that. Rebates are also available to help offset the cost of installing commercial charging equipment. So that includes level 2 charging stations, DC fast chargers, medium and heavy duty charging stations, which I think the campus here has taken advantage of, certainly in their parking structures. And
Can I
then,
ask a quick question
yeah, of
about
course.
that one?
Mhm.
Do you have to have your EV, do you have to install like a second meter that's dedicated just to reading the charger for your E EV?
You don't have to, but by just installing a dedicated EV meter, you could qualify for additional rebate. That additional rebate is $250. So with $1,000 for the charger, if you install a dedicated EV meter for that, your rebate could be $1,250.
That's great.
There's a question on the chat, I think the link you shared prior, the LADWP.com/help, sends an error message. Is there another link they can use?
I don't recall. Yeah, or is it hype is the one they're looking for, is that correct?
Oh, HEIP,
HEIP.
right. Okay,
Yes,
HEIP.
if it's
There you
not help, yeah.
And
Thank
then,
you.
sorry, quick question. So if you were to install a 240 dryer outlet to essentially get level 2 charging without buying the actual charger, would any of those costs qualify for any of the rebates?
So not a charger that you could unplug from the outlet and like throw into your trunk and then drive away. It has to be permanently installed.
Okay,
So it could connect to that 240 volt, but it can't be a portable unit where you could just take it off the wall.
okay.
Good question. Yes.
One more question from chat. Does this rebate include Glendale as well? That has its own department, but still part of LADWP.
Part of LADWP, if you are a LADWP customer, then you would qualify. I don't know a specific area in Glendale that we may potentially serve actually. But if they're a DWP customer, then they should qualify for this program. But if they're a Glendale Water and Power customer, then I would refer them to Glendale Water and Power. Any other questions? All right, I got one more slide I want to go over, which is for the folks looking to transition to buy an EV or want to get another electric vehicle and already have one. We have our used electric vehicle rebates program. LADWP offers rebates up to $1,500 through the used EV rebate program for qualifying used EVs purchased within 12 months of application submittal. Customers participating in our Lifeline or Easy Save low-income customer assistance programs could also be eligible for an additional $2,500 rebate for a total rebate of up to $4,000. For eligible vehicles must be purchased within 12 months of application submittal. It must also be featured on approved vehicle list, which is available at ladwp.com/EV. And then lastly, the model year must be at least 2 years older than the calendar year in which you apply for a rebate, but not older than 8 years. So for example, right now, if you purchase a used EV, your vehicle model year should be from 2016 to 2022 to qualify for this program. Any questions?
Do you have to buy from a car dealer, or can you buy it from a private individual?
No, it could be from private individual.
Okay.
Yes, but for this specific program, because it's for used EVs, that specific EV that you buy, can only have up to 2 used EV rebates from us. So if like, let's say you buy used EV, the previous owner, let's say you buy it private property, private sale. And the previous owner had applied for a rebate, the maximum is 2 rebates for that specific vehicle, and we track the VIN number for it.
Little commercial plug, I have a used EV for sale, so everybody.
Yeah,
Are you selling your Tesla?
Yeah.
Right on.
Will this rebate be on top of the 7,500 that California pays for?
so these rebates are potentially stackable with other programs that the state may offer or federal government in terms of tax credits too. I think that one's referring to a federal tax credit. So these are stackable with those, so you could with the rebate of up to $4,000 on used EV, potentially get much more than that too, so could be a great deal to buy used EV. Okay, and next, I think I'll turn over to Mark.
Thank you, Brett.
Brian, while Ronica is getting set up, can I, oh, there you are, nice. Another question came in from chat. It says, from earlier question, for the consumer rebate program, participation application must be received within 12 months of printed date of the sales receipt.
There you
Oh, no, sorry, that was something from Tyler.
Tyler Johnson TV.
Got it,
Yeah.
okay. I was like, that sounds like an answer to the
Great,
question.
yeah, so we had the question earlier, which was, yeah,
So he's giving the answer.
yeah, for appliance.
So 12 months, folks, is
Yeah.
12 months of printed date of sales receipt.
Yes.
Thank you, Tyler.
Okay. Good afternoon, everyone. My name is Ronak Chikalia. First and foremost, thank you so much for giving me the opportunity to present today on LADWP's local distributed energy resource and demand response program. So I know, sort of just gauging from the house, focus maybe is more on the residential side. However, we do have commercial programs as well, which I will cover. So, I'll peruse through those slides fairly quickly, but feel free to stop me again if you have any specific questions. I want to make this interactive as possible. So for today's agenda, I'll talk about LADWP's local DR portfolio, which encompasses a variety of programs, and then I will talk about our demand response programs as well. So as you can see here on our slide, our approach is a portfolio of programs. No single program alone solves our grid needs and addresses equity. It's all about a portfolio. So these boxes showcase basically the suite of different customer-facing DER and DR programs that we have, which in essence, help to generate and save money as well. Through successful partnerships with various stakeholders, we have retained the #1 solar city title in the United States based on total PV capacity for 7 of the past 8 years, which is a huge accomplishment.
Wow.
Okay, so jumping right in, the first program that I wanted to highlight is our feed-in tariff program, which focuses more on the commercial side. This program has been very popular since its inception back in 2013. So the way this program is structured is property owners and developers have the ability to install systems 30 kilowatts or greater and feed all your generation back into the distribution grid. Under this program, LADWP will purchase all the energy. So, all the energy that's generated at the facility, will purchase it for a minimum contract term of 10 years up to 20 years through a power purchase agreement. So what are some of the feed-in tariff program benefits? As a property owner, you can monetize an underutilized asset. You have a constant revenue stream for 20 years. You help LA achieve its ambitious goals of 100% clean energy. You help improve local grid reliability. As a solar developer, there are local employment opportunities both on the development and maintenance side. You also have the ability to secure the investment tax credit up to 40% for the Inflation Reduction Act. So here are some highlights of what the FIT program has gone through recently. The Los Angeles City Council has authorized 450 megawatts. The feed-in tariff program is also open to all renewable energy technologies. So anything that the California Energy Commission deems as a renewable asset, in essence, is able to participate. We also updated our pricing structure to accommodate more small-scale and medium-scale projects. And that's why you see for in-basin projects, that price is slightly higher for smaller size systems. So I wanted to sort of highlight this slide showcasing our current program representation in disadvantaged communities. As Brian mentioned, LADWP wants to continue making our programs more equitable throughout the city. And so recently we structured a carve-out to promote more carport and canopy solar projects. And we also have an electric vehicle service requirement as well that goes along for this new carve-out where we're doling out incentives. So as you can see here on my slide, of the 111 megawatts of FIT projects that we have in service, only 8.5% of these systems are in the form of carports and canopies. Carport and canopy solar adoption has been a challenge. The recent LA 100 study, that was published has identified approximately 3,900 megawatts of parking canopy potential, which is significant. So LADWP now is further incentivizing these types of systems, basically through a separate funding mechanism that doesn't impact our ratepayers. So not only do we want to, increase carport and canopy solar adoption, we also want to increase the adoption of electric vehicle transportation. So as mentioned in my previous slide, we propose basically a two-pronged approach to promote both carport solar and EVs. So we segregated the FIT carport requirement basically into two segments. One is when the charger rebate is available, and the other is without one. Additionally, if you are in a disadvantaged community, the EV chargers are required to be publicly accessible. Any questions on the feed-in tariff program? Okay, so while the FIT carport and canopy will be offered through our in-basin service territory, it will also be targeted to disadvantaged communities. So, we want to encourage participation in these communities. So what we are proposing is a 20-cent per watt incremental adder if you're in a disadvantaged community. So, if you have a system under 500 kilowatts, you would get $1.70 per watt installed in a disadvantaged community. So LADWP has expanded the existing FIT program to include 10 megawatts of solar plus storage program. So we have the FIT plus pilot program, which allows for co-located solar plus storage. So as it stands, the program is specific in nature, where we've targeted specific zones of development. We call them preferred zones of development. And this is where we've determined the value of energy exported to the grid being the greatest. The FIT Plus program is structured through a competitive bidding process where there's a term exceeding a term not to exceed 20 years. So while the primary purpose of FIT Plus is to export energy to the grid, it may be also designed to increase resiliency and reliability. So each facility is required to conduct normal operations. However, applicants do have the option to conduct additional resiliency and or peak shaving options as needed. So LADWP is accepting new applications for unused capacity that we took from the 3 tranches, A, B, and C, and we allocated it to all 3 zones for projects that are participating in FIT Plus. Systems currently will only interconnect to the 4.8 kV distribution site, and developers are also able to take advantage of the $150,000 that we have in reimbursable interconnection costs. So the next program that I wanted to talk about is a very new program that recently acquired board approval. It's our commercial energy storage to grid pilot program. I know it's a mouthful, but it's our first pioneering pilot, basically as the first municipal utility for vehicle to grid integration. And its primary goals are to promote electrification of transportation and also enhance local energy storage during optimal times. So the CS2G pilot program outlines a distribution voltage energy storage supply service rate agreement for customer-owned storage systems. So that includes both stationary and non-stationary types. Key elements include customer-specific charging and discharging rates. There's also an interconnection agreement, and then we also have a reimbursement policy, for interconnection cost. So let's dive into the program and some of its main requirements. Firstly, participants will need to sign a specific agreement. It's called the Distribution Voltage Energy Storage Service Supply Service. It's called the DESS agreement. So there are 2 types. One is the DESS2, which is for customers on our 4.8 kV distribution system. And then there is the DESS3, which is for customers on our 34.5 kV distribution system. The contract term shall be at least 5 years, but no more than 10. And it's basically driven on the manufacturer's warranty of the energy storage component. So let's talk about now the program's capacity details. The program has 20 megawatts, which is divided into 3 initial segments or tranches. Each tranche has a 90-day window. If we have any sort of unused capacity from these 3 initial tranches, we will reallocate them potentially towards a future tranche. So I think this program probably is of importance because VNEM is specific in nature to multifamily residents, and I earlier did see a show of hands for multifamily dwellings. So the virtual net energy metering pilot program is basically an arrangement that enables a multi-meter property owner to build a single solar system on the facility and allocate a portion of the proceeds to tenants. So proceeds from the sale of energy will be financially divided with no less than 40% going to the building's tenants. Unlike net energy metering customers who receive credit balances on their bi-monthly bills, tenants will receive monthly checks, in this case, using the current feed-in tariff pricing structure that I've shown right here on my slide. The next 2 programs that I wanted to highlight are community solar programs. The first one is the shared solar program. So the shared solar program is also structured to enable residential customers living in multifamily dwellings, such as apartments, condominiums, and duplexes, basically to fix a portion of their electric bill against rising utility costs for 10 years. The beauty of this program is there are no enrollment costs, no maintenance costs, no the hassle of actually installing a solar array on your facility. So participants are able to subscribe to either the minimum of 50 kilowatt hours or 100 kilowatt hours of energy on a monthly basis, basically depending on the consumption at the site itself. The other community solar program we have is our solar rooftops program. So we created this program for customers, who may not have been able to benefit from solar in the past, because of the high cost of installing solar panels. So how this program works is LADWP will install connect and maintain the solar panel system and issue the customer basically an annual check of up to $600, depending on the size of the system. The agreement is valid for 20 years, and you could potentially save up to $12,000 for the term of the contract.
Right, I can ask a question about that program. That sounds super interesting.
Sure, absolutely.
What would, roughly speaking, qualify, when it says qualifying homes only, what sort of puts you in the category for qualifying?
Yeah, great question. So typically what we do is we go out to the facility to assess the roof to make sure, at least that roof will be able to accommodate a solar installation. So, that's sort of one of the main sort of requirements per se, because we face a lot of challenges with much older homes. They don't have, the necessary roofing requirements, to host a solar system. So that's one of the main requirements, I would say.
And then is DWP sort of taking all, it's almost like my individual home becomes a mini power plant for you.
Correct.
I'm not using any of that power in my home.
Exactly.
From those panels, it's going directly to you. So interesting. So does DWP then also kind of maintain them, like on whatever regular basis you're gonna come scrub them down?
Absolutely.
Interesting.
Absolutely, yes, correct, yeah, and so previously we had the solar incentive program, because solar has been obviously been there for quite some time. So previously, when the cost of solar were extremely high, we did have the solar incentive program where we would dole out rebates to our customers. Part of SB 100, we had to provide our customers with these incentives, but that program sunsetted, right?
Okay.
And as part of that effort, we wanted to make sure solar was equitable. So, we created these commercial programs, and the solar rooftops program was one of them.
Got it. Thank you.
Sure.
And this is commercial and residential? It could be
This is all residential.
residential,
Yeah,
okay.
This is residential.
And I haven't kept up with how powerful individual panels are now, but if you were to do 10 kilowatts, you have any idea about how much roof space you might need for that? I imagine it's gone down a lot over the years.
Yeah, 10 kilowatts.
It's gonna take a lot of roof space.
Yeah,
I mean, now with panels, you could see panels between 500 kilowatts to 750 kilowatts, right? As opposed to back in the days when there were 200 kilowatts or so, but
I mean,
The
I do
average
not
home
have a
we
big
put in
house,
is
but
about
even-
2.5 to about 4 kilowatts.
I spoke
2.5
over him.
kilowatts to 4.
okay.
That's the
Yeah.
average home.
The 5
residential.
kilowatts to 4 kilowatts is the average.
average on a residential home, correct?
And for the lease payments that DWP would pay to homeowners, is that through credits on your bill or that?
No.
That's through checks, for a check, right?
And they pay you upfront
Okay.
at the beginning of the year.
Any plans for all these checks to be direct deposit, saves the paper?
Yeah, that's a great question. So, as part of, a lot of efforts on our end, we're trying to integrate this into our billing, right? We certainly want to avoid this, right?
Sure.
Because it is a hassle to say the least, right? And so we definitely want to improve our existing systems and have that ability to just credit you as a customer, right? We do have plans to sort of streamline that further, and and then hopefully as part of DRRFP that will come out, which will expand these programs, we hope to integrate that billing piece as well. Okay, so I wanted to now focus a little bit on our demand response programs. So, as sorry about that.
Great way.
Interesting. Try again.
Coffee break, everybody, coffee break.
You try to sell your property if you have that lease program, how does that impact your selling the property?
You can transfer it to the new owner. And that's an incentive because they get the funds. From then on goes to the new owner through escrow. Or you have the option to remove it.
Okay.
Yeah, and there's no cost associated with that either, if you were to remove it, which is, so that's the one nice thing about that program. You as a customer don't sort of have any costs associated, you just have to host that system and everything else is on DWP's end.
But there's no way to benefit from the energy that's being.
No,
No,
captured there.
no, correct,
it's
yeah,
basically renting your rooftop,
Right.
and the energy goes back to the.
yeah, and that's important for us because, we want to claim those renewable energy credits, right? So, we get PCC one recs out of those because all that energy is exported directly back to the grid, which is different from like if you're a NEM customer, right? Those renewable energy credits are different, those like portfolio content category 3 recs, which are important to DWP as well, but not as important as the PCC one recs that we get out of the generation directly into the grid. All right. One. Okay, sorry about that, guys. Not sure I got kicked off, but yeah, let's talk about our demand response program. So, as you can see on the slide here, demand response programs have fairly aggressive goals to expand to approximately 575 megawatts of demand response capacity. These goals reflect LADWP's commitment to scaling demand response efforts, to ensure that we enhance grid stability and, support strategies in line with future energy needs. So over the years, LADWP has made significant strides in developing and expanding our demand response programs. Starting in 2014, we basically set an ambitious goal of achieving 500 megawatts of DR capacity. We launched the commercial and industrial demand response program in 2015, initially with contractor support, and then we transitioned, to an in-house team by 2017. In 2019, we introduced the residential bring your own thermostat program through an RFP, and by 2020, we had rolled out the Power Savers program, which is for residential and small commercial customers. The LA 100 study that was completed in 2021 further, guided improvements, and from 2022 to 2024, sort of we, focus on automating and consolidating our DR initiatives, which resulted in an RFP that was, recently advertised in 2024 in April. So jumping into some of the programs that we currently have, as you can see, our programs underscore our commitment to efficiency and load management. Our Power Savers program, which is for small residential and small small commercial customers, operates on a bring your own thermostat model. And then on the other hand, we have our commercial and industrial demand response program, which targets larger scale operations with a more focused sort of customer base. So the Power Savers program has currently enrolled over 51,000 customers, installing over 60,000 thermostats, and we have savings of approximately 1,700 megawatt hours of energy. So this is the equivalent, to powering 465 homes for a year. To encourage participation, the program offers incentives, including a $65 incentive per account at sign up, and then up to $120 seasonally, depending on the customer's performance. So this slide here basically details some of the key aspects of the Power Savers program, which runs from basically June 1st through October 31st. The program can initiate a maximum of 20 demand response events, each lasting up to 4 hours, typically scheduled between 1 p.m. and 10 p.m. So there are no events scheduled on holidays. The program may also include a pre-cooling phase of up to 60 minutes with a 2-degree offset and a maximum event duration of 4 hours with a 4-degree offset to manage energy consumption during peak times. So currently, participation in the Power Savers program in disadvantaged communities is below our targets. As part of the Department of Energy grant that was recently awarded to LADWP, we are going to be dedicating funds to increase participation through incentives, particularly in these communities. So, that will be an exciting time. We're actually slated to go to our board end of this month to present sort of how we'll be spending the DOE funds that were allocated to us. And there will be efforts on the demand response side and on the solar programs as well to help support all these different programs.
Question about that. I'm a little surprised, but then when I think about this a little more, I imagine in some of these communities, people probably just have your basic thermostats, right?
Absolutely, yeah.
Is that what you guys are attributing the lack of participation to, or are there other factors at play?
Well, I think in disadvantaged communities, I think it's also just the concept of this program being present, right? People are just not aware that, hey, I could participate in a demand response program, right? And I would have some savings, right? So I think there's that outreach effort also sort of needs to, I mean, we do a lot of marketing on our, no question, like we reach out to various communities to inform them of the programs that we have and to sort of help them get them up to speed, right, with the program. But I think part of it is just, people sort of in these communities don't really know about these programs, and some people are like, oh, I have to, go through all this hassle, I guess, of to subscribe to this program, but maybe they feel like their savings aren't that much either, right? And so that's why, on our end, we're sort of trying to figure out how can we further incentivize these communities, right? So as part of that effort, we will be allocating thermostats to these communities, right? To say, hey, we have this many thermostats available, and we are going to be offering these thermostats to these communities to help them and set them up, right, for success.
So I'm a part of this program, actually. My multi-family unit, I'm in the valley.
Okay.
And they actually just came in and gave us all Nest.
Yes, yes.
Thermostat.
Yes.
And it's actually really cool. I can control the temperature with my phone. And Nest or whoever controls my temperature as well when it's super high.
Yeah.
And then I just started receiving random emails from you all. I guess it's like connected somehow, but to talk about this program, and I just registered and got checking mail, which was pretty cool.
That's awesome. Thanks for the positive feedback.
Yeah, your marketing is great.
Yeah, no, and then so like I said, yeah, we do have a lot of marketing outreach because we want to ensure that we get to our entire customer base, right? But I think we can further incentivize our customers, and that's why it's great that we got this DOE grant, because we can use some of that funding and really channel it towards these programs and further incentivize them so our customers can benefit even more. So thank you for that.
Right, do you mind if I just make sure that Valerie has a little bit of time to talk?
Yes.
about credit union?
Yes. Yes. No, I'm at the tail end.
Great stuff here.
Yeah.
Now you have to come back.
No problem. All right, any questions? I guess I'll end here.
I'm so sorry. I didn't
No,
want to-
no, this is perfect. This was a great segue. Thank you so much.
Thank you.
I think someone has my slide somewhere. Evan has. While they're coming up, just a show of hands, how many of you actually already have a banking relationship with USC Credit Union? Okay, a little less than half. Great, lots of opportunity. We can go ahead and advance. Just to give a really quick high level of who we are USC Credit Union, part of the Trojan family. We our kind of slogan is we're for people, not for profit. So a big piece that underlines the credit union movement is we have a different business model than banks. So we don't have a room of shareholders that we're trying to make money for. As a member of a credit union, you are a shareholder of the credit union. So every penny that is made goes right back into our business through the form of lower rates, better features, all of that. So for those who are not as familiar with the difference, there is a difference between credit unions and banks, even though, you know, debit card's a debit card, auto loan's an auto loan. At USC in particular, we were actually started by USC employees. We just passed our 50th year in operation. Today we serve far more than USC employees, students, staff, all of Orange County, all of Los Angeles County, and family members can be sponsored as well. But know that you're kind of joining this other arm of the Trojan family by being a member of the credit union. You can advance. Kind of covered that a little bit. Our marketing team made some beautiful slides, so we're gonna blow through some of them so we can talk about financing. You can go to the next one. Next one, we'll send slides out, I guess. We too, like university, and Mick shared a lot of the university's goals. We also have a commitment to sustainability as the credit union ourselves that we think complements the universities. Some of that's through our products that we offer. We want to make sure that we can help people finance these projects. Not everybody has an extra 50 grand sitting aside to put solar on their rooftops, right? So we want to make sure we have a variety of products for everything from solar to your electric vehicle, an e-bike maybe, or even some of those, you know, smaller purchases like a new refrigerator or AC unit. We also have a few unique partnerships like with the Arbor Day Foundation, where for every loan that we book that's for clean energy, we plant a tree. We do up to 5,000 every year. We've done it, I think, 3 years in a row now. So really proud of some of our partnerships there. And now to the most important slide for each of you. I want to talk about how you can actually utilize these services. So overall, not one solution for everybody. I appreciated Ronak sharing, you know, there's all this suite of programs that are going to help us achieve our goals. There's not going to be one thing that's going to get us where we need to be as a society when it comes to clean energy. Some of us are homeowners, and the nature of that is you might have access to equity or you might not. Maybe you bought your house yesterday and you have a big ol' loan that you're paying off, and it'll be quite some time before you have access to that. But if you do have equity, I think tapping into that to finance bigger projects to really convert your home, especially if you bought a 100-year-old home like I did. There's a lot of work that needs to be done to make that a more sustainable operation. You can use equity, either in the form of a loan, which would be kind of a one-time, I need X dollars, I'm gonna get a loan for that amount and pay it down. There's also an option for a home equity line of credit, where it's kind of like a credit card. You apply for an amount, you can use that, pay it back again. Usually those terms are anywhere from 10 to 20 years where you have access to that. We offer both of those. For those that are interested in getting solar, maybe on a brand new home you just got, you know, it has equity, we have solar loan options. Those are really great because one, you don't have to wait to build equity to get some of those projects done. And you can immediately access some of the benefits, particularly tax incentives that the government has. Who knows how long we'll have things like that available, especially with the change in administration coming. I think now's a really good time to consider that. I think right now it's a 30% tax credit for the cost of your project. So we love to work with our members to help set up those loans in a way where you're getting what you need to do the project up front, and not necessarily finding yourself short because you're counting on a tax credit that's not going to come till next May anyways. Solar leasing is also an option. We do not provide solar leasing, but I always like to have a little asterisk and mention this. There's tons of partners in Los Angeles that can make leasing available. I would recommend not to go that route if you can get a solar loan or home equity, because if you lease, you don't get tax benefits for that. The company that leases you the system does. So the government's still doling those out. They're just not gonna impact your pockets. So I really encourage you to consider that. And we love at the credit union to get into those fine details and help you make those decisions. For some of the medium to smaller projects, we have electric vehicle loans. Really, they function no differently than your regular auto loan, except we give you a better rate. So you get an extra discount if your vehicle is at a certain NPG. So it doesn't have to be all electric. It could be hybrid, or even some gas vehicles that just operate really well can qualify for that. And then for, all these different purchases, many of which we're gonna get rebates from DWP on, you gotta pay for it up front to get a rebate. So, it's the difference of, you need $1,000 to really get across the finish line. We wanna work with you, whether that's in the form of a credit card, a small short-term loan, that you wanna pay off in the next 3 to 6 months while you're waiting on that rebate to come through. Or maybe a tax return to come through, something like that. We have all those options for you available. That's big picture. I'm happy to talk more in depth about any of our products with any of you. There's also right outside this building, we're in the same building, but we have a branch right here in Student Union that you can access from the courtyard. I think our branch manager is gonna pop in at about 1:30 if any of you wanna meet him. His name's Anthony, he's really wonderful. But we also have teams online and we set up phone appointments and things like that as well. But yeah, happy to be here and answer any more questions. And how'd I do? Right on time.
Right on time.
On time. Good.
All right.
Who will pass to the
I
rest?
would also just add it. Unless something has dramatically changed recently, solar leases also make things a little bit more complicated if you sell your home. Transferring the lease and things like that, so that's another reason why a loan could be a better way to go.
Yeah, typically, say you wanna sell your home and you still owe 10K on your loan, you just pay that off as part of the loan transaction. Like if you sold your car. That's it.
I remember several years ago, people really started first adopting solar for single family homes. And there was all this like, oh my God, what will happen when I sell my home? And it's gonna get complicated, like, I guess either DWP or people. Like, is it pretty seamless? Like, it just seems like there's a lot of fear. We don't know how it's gonna go down. And then I stopped paying attention to that conversation, so I don't know.
I don't think it's caused issues people thought it would, there are additional steps in terms of paperwork. Leasing is certainly more complicated because you have to transfer that lease. You can't really opt out of it. The system's there. Owning, I think it's really simple. That just becomes something you talk about in pricing and negotiating, as a owner. I think that's, just like having a recently upgraded kitchen that can add a little bit to your value. I think solar can do that to an extent.
And I would also say that all of these measures, if you do go to sell your home, you can do the green addendum. Which is basically delineating what all these things are and what kind of impact they might have. I did that on my home in Phoenix on the way here, and it actually boosted our assessed. What do you call it? The
Assessed
the
value.
sorry?
Assessed value.
Yeah, the assessed value, it increased it by many thousands of dollars.
So I think that will likely grow, just, there's a lot of requirements for new builds and things now, especially in a place where most of our homes are old. Having some of those recent enhancements could really make a difference in the value.
Having solar and new, and development and new properties is mandated by law.
Right.
So
Yeah.
that's not gonna be the issue for transferring in the near future.
Right, it's just gonna become
It's
normal
their
out of
normal
business.
process.
Okay, we got 1:30. Hang out in the hub because it's a lounge from Monday to Friday, 9 to 5. Feel free to be here because we're all here. But thank you, everybody. Rest who attended, thank you for coming, learning, and listening. Colleagues for coming out and sharing all this great information. I don't know, we can all go back to our respective camps and talk about this, but I would love to think that we can get traction with doing something like this
more and more for employees at USC who'd love to learn about that information. As mentioned, we will post all this to our website as soon as Zoom link is cleaned up. I mean, Zoom report is cleaned up. We'll put these slides up as well. I think this was fantastic. I've heard from a ton, and I thought I knew a ton going in, but I actually didn't know nearly as much as I thought. So thank you, everybody.
And Gloria Gonzalez from University Relations is here as well, and I know that University Relations has a lot of programs out in the community. Where the community members get together, so, you know. There may be possibilities of kind of creating a little bit of a roadshow for communities around USC campuses.
And my colleague Joaquin is here, so I'm here, you can do it for.
Oh, great.
Intro.
I do the local government relations, so.
Great. All right, thank you.
Great.
Thank you so much.
Currently